Good afternoon, friends. Important changes in GST by this Union Budget 2025 presented today on 1st of February 2025. So there are important clauses number 116 to 129 of Finance Bill 2025. We are going to discuss each of the clauses one by one. Let me share my screen first so that we can discuss all important changes. The first important change, I'm going clause by clause. So 116, the clause number, and there is amendment in section 2, subsection 61. For your ease of understanding, now what they are doing in the definition of input service distributor, they're drawing the reference of section 5, subsection 3 and subsection 4 of IGST Act, meaning thereby input service distributor now can pay GST under reverse charge for interstate supply of common input services. And then he can distribute this credit among the distinct person under same PAN number. And that is what this amendment is being made under section 2, subsection 61 of CGST Act. For the ease of understanding, ISD is distinct from cross charge. ISD is what? When you are procuring common input services from a third party, which is used by different distinct person under same PAN number, you can take the credit and then you need to distribute the credit as per the method prescribed among the distinct person. So there are two important change, section 2, subsection 61, and corresponding change also being done under section 20 of CGST Act. ISD can pay reverse charge on interstate supply of services, and then he can further distribute among the distinct person under same PAN number. So this is broadening, and effectively now this is applicable from 1st April 2025. So you should geared up. This is going to be compulsory. Now ISD different from cross charge, and the difference of cross charge versus ISD dealt with for the past period by circular number 199 dated 17th July 2023 for the clarity purpose. So you can run through that circular as well. So this is the first amendment and first clause which I want to draw your attention. Going further, there's another clause getting added, section 2, subsection 116A, 116A. This subclause is newly inserted. And what this talking about? Now, unique identification marking. So they're defining what is unique identification marking. For the ease of understanding, as per the recommendation made in 55th GST Council meeting, government going to introduce track and trace mechanism for specified goods for specified class of taxable person. So there will be unique identification marking, and through that this track and trace mechanism going to be implemented, and it is being heard that this is going to be implemented on tobacco, pan masala, on specified goods and a specified class of taxable person. They will notify, but it is being heard that it is going to be applicable for the sin goods. We are also hearing out copper, iron, scrap, paper, plastic. So you have to wait and watch. But now this is the legal endorsement that this is going to be implemented, unique identification marking, which is now being defined under section 2, subsection 116A. And accordingly, they have said who all are supposed to follow. What are the specified goods? Notification will come out. And this is being coming out from section 148 capital A. If you don't follow, then there is a penalty also. Penalty under section 122 subsection B, which I will run through later. If you don't follow and failure to do that, there would be penalty of 1 lakh rupees or 10% of tax amount, whichever is higher. So keep this in your mind. Next, amendment in section 12 and section 13 pertaining to time of supply provision for vouchers. You know, very recently, 55th GST Council meeting has made the recommendation, and they have said voucher is neither a supply of goods nor supply of services. And a circular number 243 also got issued clarifying that this voucher is either money or a transaction in actionable claim, neither a supply of goods nor supply of services. No GST leviable on supply of voucher per se, but if underlying goods or services, because this has been considered as a prepaid payment instrument, prepaid payment instrument. So underlying goods or services supplied against the voucher going to be taxable. And the time when underlying goods or services are being supplied, that would be the time of supply for supply of underlying goods or services. But voucher per se, no GST, neither a supply of goods nor supply of services. Hence, there is no need of time of supply. And that is how section 12, subsection 4 and section 13, subsection 4 is getting omitted. Having said that, important one, section 17, subsection 5, clause D, safari retreats. You'd be recalling that in safari retreats, there were detailed discussion on plant and machinery, which is being referred under section 17, subsection 5, clause C, plant or machinery, and thereby section 17, subsection 5, clause D is talking about. Now they are doing away. They are saying under section 17, subsection 5, clause D, it would be read as plant and machinery. So whatever judgment has come from safari retreat is being done away retrospectively from July 1, 2017. So all the benefit, whatever we were talking about on safari retreats, because what was the dispute in safari retreats? With a credit on construction of a mall available or not. And it is being argued that mall is being considered as a plant, and the reference of plant or machinery as given earlier under section 17 subsection 5 clause D was referred to. And while passing the judgment, they have referred one income tax judgment coming from Taj Mahal Hotels Limited. Plant means any mall, warehouse, building other than a hotel or cinema halls. So that judgment, the benefit of that judgment is now being done away. Safari retreats is being done away. And that too retrospectively from July 1, 2017. Now, only point of submission is, now they are making it retrospectively applicable, quite obvious. They do not want to give credit. And that is what being referred in 55th GST Council meeting. The first point which I want to draw. If somebody has taken a credit on the pretext that there was a reference of plant or machinery under section 17, subsection 5, clause D, is it going to be a subject matter of 73 or 74? 73 non-fraud case, 74 fraud case. To my mind, wherever interpretation issue involved, that should be considered non-fraud cases. But let's wait and watch. Just to recall and add further, the recent judgment coming from pre-GST era also, Bharti Airtel, whether a particular item is a movable or immovable, with reference to telecommunication tower or prefabricated structure. And it is being held that telecommunication tower, which is being screwed with the structure, is not embedded with earth. It is movable. Hence, credit is available. This was the judgment of pre-GST. To my mind, this judgment hold good in GST regime as well. So we can always say, even though plant and machinery, if you look at the definition, any equipment, apparatus, machinery, with a structure or foundation, excluding land and building, telecommunication tower, and pipeline laid outside the factory, right? But to my mind, and the court, honorable court has also said, just because telecommunication tower is excluded from the definition of plant and machinery does not mean that it becomes immovable property. So we have to pass a test, functionality test, whether a particular item is a movable one or immovable one. Be it under section 17, subsection 5, clause C or clause D, it has to be immovable property. If it is movable, credit is available. This is what doing away the effective outcome of Supreme Court in the case of Safari retreats. Having said that, section 20 pertaining to ISD, he can pay reverse charge liability for interstate supply of services, and that can be distributed. Corresponding provisions are being given. Now, next clause, clause number 121, section 34, subsection 2. For the credit note, simple. If I'm a supplier and you are all my buyer, recipient, if I'm issuing a credit note, let's say for 10 rupees, I get adjustment of tax component on a credit note with my outward tax liability. It is permissible only when being recipient, you are reversing credit pertaining to the tax component which is being charged on a credit note. So this reduction in the hands of supplier is permissible only when buyer or recipient reverse credit pertaining to credit note issued by the supplier. This is what the provision talking about. So you would be knowing, and I'm recalling you, that GSTR 3B, which is coming on a portal, has automated this process. Point number one. Point number two, if you go to invoice management system, which is made optional, now getting compulsory, any credit note issued by the supplier or any upward or downward adjustment done on credit note by the supplier, you can't keep, it will be visible to you on IMS portal, right? You can't keep it pending, because ultimate effect is this credit note issued by the supplier, he gets the adjustment with his outward tax liability. Thereby, it is being stated, being recipient, you can't keep it pending. Either you have to accept. If you accept, then the reversal of credit by you as a recipient. If you reject, meaning thereby the adjustment which is taken by the supplier, let's say in a particular month, February, and you have rejected the credit note on IMS portal being recipient, then tax component benefit which is availed by the supplier will get added to the subsequent liability of supplier in subsequent tax period. So IMS is a different point I'm not discussing, but this is what the provision for section 34, subsection 2. Having said that, coming back to 38. 38 is nothing but making IMS now possible and obligatory. So get prepared yourself. Corresponding changes are being made under respective subsection of section 38. So you can watch all those videos. Even on IMS, I've done one webinar very recently. You can watch all the videos available on my YouTube channel. Come back to section 39. 39, they are now drawing a reference that they can put certain condition and restriction for filing of GSTR 3B. Quite obvious. You must be recalling Rule 59, Sub-Rule 6. If you don't pay up your taxes of preceding tax period, then you will not be able to file GSTR 3B. And there are lot many provision from Rule 59 sub Rule 6 perspective, then go to 37 for GSTR 1 time limit. Unless you file your GSTR 1 for the previous tax period, you will not be able to file GSTR 1 for the current tax period. With a time limitation, maximum 3 years for the belated filing of GSTR 1, made effective from 1st October 23. I hope you all are recalling that. 39 also talks about if you don't pay 3B of previous tax period, you will not be able to file 3B for the current tax period. And even for filing 3B for current tax period, you must file 1 first, then only 3B gets enabled, and 1 and 3B must match. Otherwise, notice under section 75 subsection 12 read with Rule 88C. So those are the relevant provision you must keep to your mind, and they are enabling provision, putting condition and restriction that registered person will not be able to file GSTR 3B for the non-compliances. Coming to important, and you can say draconian provision. Draconian. This is the one of the draconian provision I'm categorizing it. Under section 107 and under section 112. It is pertaining to appeal filing for the penalty order. If you go to the proviso, they are amending a proviso under section 107 subsection 6. What was the earlier proviso? Listen very carefully. The earlier proviso was applicable only when you get penalty order under section 129 subsection 3 for that, violation of eBay bill. So detention, seizure, and release of goods or conveyance in transit, section 129, you must be recalling. You get penalty order for 200%, right? If you want to file appeal, provision got inserted from 1st January 2022 that 25% pre-deposit to be made, and pre-deposit always made in cash. Am I right? Am I right? This was so far so good, but now with this change, what they are talking about, they're going to amend that proviso, and they're saying, Mr. Jain, it is not from 25% to 10%. You would be thinking my pre-deposit getting reduced from 25% to 10%, one way to look at, but another way to look at. There's so many penalty order you get under section 122, 122(1)(a being co-notice, right? Taxes being demanded from the supplier or recipient who has committed the specified offenses, 21 offenses. But if you are a co-noticee in that particular so-called notice, they are demanding penalty from you. Very recently, that Supreme Court judgment upholding the Bombay High Court judgment where penalty so-called notice was issued to an employee concerned who was a taxation manager of amount 3,731 crore rupees. That was only so-called notice. That was vacated by Bombay High Court on legal footing, right? When SLP was filed in Supreme Court has dismissed the revenue SLP. But just imagine in all such cases, if impugned order is being passed and you want to file appeal now, minimum 10% pre-deposit of that penalty amount. Otherwise, normal provision is that if you are a registered person, want to file appeal, you must pay 10% pre-deposit of tax component, disputed tax component. Nothing required for interest and penalty. For penalty, as per the provision existed before, inserted from 1st January 2022, it was only for section 129 subsection 3. Penalty for violation of eBay bill, but now they are saying they are including all penalty order. So first appellate authority 10%. Subsequently, when you go to tribunal, then in addition, again 10%. So look at this as a draconian provision. And fortunate enough that employee concerned getting so-called notice for 3,731 crore rupees got vacated by Bombay High Court. Revenue SLP got dismissed by Honorable Supreme Court. All videos are there on my YouTube channel. You need to really watch those videos. But this is what draconian provision of Union Budget 2025. Having said that, come to the penalty provision for not following unique identification mechanism. They are saying that penalty going to be levied when you're not following track and trace mechanism. And what is the penalty amount? Just read, starting with a non-obstante clause. Notwithstanding anything contained in the CGST Act, overriding. So starting with a non-obstante clause, where any person referred to in clause B of subsection 148 capital A. This is again section 148 capital A is a new section for introduction that government will implement track and trace mechanism for specified goods, specified class of taxable person. If you're not following and contravening the provision, he shall, in addition to, so it is in addition to, any penalty under chapter 15 or the provision of this chapter. So in addition to, be liable to pay penalty equal to an amount of 1 lakh rupees or 10% of tax payable on such goods whichever is higher. So be careful. So you will come to know which all goods are going to fall under this unique identification and through a track and trace mechanism. By the way, you'd be thinking, what is this track and trace mechanism? It is all through software. You have seen the barcode, right? You have seen the RFID tag. So they will ask you to follow track and trace mechanism, which is computer readable, software readable, so that they can track the movement of such goods. And which goods they will notify. But what all goods are in the list, those are prone to tax evasion. Tobacco, pan masala, scrap, plastic, paper, it is all being discussed. Recently, 55th GST Council meeting also discussed this component, but you will come to know when notifications are being issued in this regard. So what is section 148 capital A, which is the new section getting inserted? They are saying it is going to be applicable for the specified goods, for the specified person or class of person who are in possession or deal with such goods to which provision of this section shall apply. So this is what section 148 capital A. Having said that, they are also making amendment in schedule 3, and schedule 3 is nothing but neither a supply of goods nor supply of services. What is being amendment? They are doing the inserting subclause AA in paragraph 8. What is that? Supply of goods warehoused in SEZ or in a free trade warehousing zone to any person before clearance for export or to the domestic tariff area. For easy understanding, I'm in SEZ, you are in SEZ. If I'm supplying goods to you within SEZ, it is neither a supply of goods nor supply of services. No GST leviable. So it is before export or before transferring to DTA, domestic tariff area, and they have defined what is going to be meaning of SEZ, free trade warehousing zone, domestic tariff area, and this provision they are inserting with retrospective date 1st July 2017. And whenever any benefit, lot of litigation in the past on this point, right? So if you have paid any taxes in the past, of course, such benefit comes with one rider, refund of such taxes will not be given to you. So genuine and honest taxpayer at disadvantage comparing the person who are litigating, fighting for it. That is what the provision talking about. But to my mind, we can always dispute, can you demand tax? Can you say it is supply of goods when it is happening between one person to another person within a SEZ unit? To my mind, it is not taxable at all. If you have paid the taxes, that will be considered as a without authority of law, Article 265 to the Constitution of India. So be careful, but this is what the change they have brought under this provision. So no refund shall be made available. So I have tried my best in a quickest time possible manner to elaborate all important changes in GST, which is coming out through Union Budget 2025. I will try to give you more insight on income tax as well, but in a different video. Lot of things are being stated from middle class. Now, personal income tax limit is increased from 7 lakh to 12 lakh rupees. And if you're a salaried class, you get standard deduction, 12.75 lakh rupees, no income tax. If exceeds, it is all for new tax regime. If exceeds, then the slab rate is also rationalized. So ultimately, you are getting benefited, and it is estimated and stated by Honorable FM in the budget speech that they are going to forgone 1 lakh crore rupees for giving this benefit to the middle class. And why this benefit? Consumption need to be boosted up. Our inflation is going up, GDP going down. To boost the GDP, we have to give a lot more money in the hands of middle class for consumption. If consumption goes up, my GDP goes up. And that is what the matrix which is working out. So on income tax changes, I will try to make another video tomorrow and will post on our YouTube channel. Keep subscribed. If you are not subscriber, first part, you get yourself subscribed for watching such updated video. I'm trying my best. Let's walk the talk. Sabka saath, sabka vikas, and sabka prayas. This is the theme line of Union Budget 2025. Thanks for watching. Thank you very much.